Good morning, everyone. Today is Thursday, February the 28th, and this is the Futures in 5, taking a look at the markets. We've got this tight action. I drew these numbers yesterday. They still remain the same. We did drift downward. Now listen, when you've got this upward moving average and you see the big wicks, watch for them to stabilize on a tight time frame, and you'll know that it's going to be moving to the upside. And what we're doing is building higher lows this morning, but we've got all these sellers right up here, so you want to really watch out for that. If we get up over 27.95 to 27.96, watch the pullback into that region to stabilize, and then we'll see more upward action. Otherwise, just like this, any kind of big expansion to the north is going to be met with sellers. So what do you want to do? Do you want to look for a breakout and take it? Do you want to look for a breakdown and take it? My suggestion is no, simply because that's not what the trend is. A trend in formation allows you to take a breakout. This is not a trend. This is a congestion event. Volatility continues to tighten, and so as long as that stays narrow, that volatility range stays narrow, and we don't break out and stay out on either end, we're going to move back and forth. So that's really what you want to watch for. Reversal patterns are really hard psychologically to take. The second they break out and hold, you're going to have to watch out for them. My thought is, if they break out, watch for them to fail and then fail their breakout. So you really are participating right here in these spaces, as opposed to right on the edge that could break you and make you get stopped out, but more closely into these spaces that hold this edge, pop up, and then give you higher regions. So that's what we're looking at. Taking a look at the NQ, we've got the same sort of thing, holding the edge here. Yesterday, broke right down and tested this adaptive moving average. What is this one? This is the 20, right? We know this is the 2-week VWAP, which I like because it's not super noisy and it gives me range and all of that. So this is our edge on downside pressure. And we can see that right now we're filling in a little bit of shallow volume. So, you know, we could easily pop up into this area and then break down again. Are we looking at the same kind of pattern? Essentially, yes. What we have to do is, if it breaks down through this space, we've got to, if we determine we're going to take a short, wait for the failure on a tight time frame and stair step it down into the support zones. I drew this arrow. It came right into that zone. We've got this arrow way up here. My thought is that it really is a bit tighter than that we're not going to jump up over this area. We are waiting for a catalyst. I'm not really sure if that catalyst is going to be positive or negative, but it is what it is. Same thing here. This motion, a little bit tighter in terms of price action. And now we are looking at this support area to hold, which is higher, right? So there's a little bit of bullish action there, but plenty of resistance at the 26,070 area or so. So that's really what we're looking at. Pullbacks, bounces, rejections up here on the break forward, with this notion that, hey, listen, I continue to make lower highs across the board. I better be careful trying to buy anything and hold it above these regions. Start looking at where everybody starts showing up to sell and take some profit there. You don't have to squeeze blood out of a turnip. You're not here to make every single penny off every single tick. You're here to go in, grab your piece of cheese and leave. I mean, especially if you're an intraday trader, right? I mean, we're not here to slice the edges like a truffle. It's just not, it's not that game. Right? We just, unless you're working with a great big machine, and then we can talk about all kinds of different things there. But we're not. We're just using our heads, which are really great machines. We just don't know how all the buttons work. Unfortunately, that's the way it goes. So what do we have here? We have this rise, the fade coming right into the moving average, and the hold of this zone right here. Looks like a higher low to me. Pullbacks into this area will give us some traction, but no, we got a lot of resistance patterns sitting around this region, so I'd be pretty careful. Maybe draw a trend line right around here. Take a look at this. Watch for it to break, pop out, and then come back and hold that zone. Then that gives you an upside pattern. Otherwise, we potentially are going to break down in this particular channel event. Could this be, what's the word? My brain is not giving it to me right now. Oh yeah, could this be a flag? Certainly it could be a flag. That means it would break out and continue to the north. A lot of very smart people calling for oil to be long. My suspicion is not going to run off without a hitch, particularly with all the technical divergence. Taking a look at gold, it's done exactly what we wanted it to. Bounce actions give us resistance paths, and so we're going to continue to look for that region, right? If we want to take a look at the range of motion, there's a pretty solid channel here because these lines are certainly parallel. Looking for a deeper edge. I think a great buy zone, likely well below that. Okay, so what are my thoughts today? Potential blow off top to the upside, but clearly exhaustion patterns across the board and a very likely sideways motion today until we figure out what in the world is going on with the traders and where they're sitting waiting for the breakout. Take care, everybody. See you tomorrow.